Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. Today was the last day of May and a little volatile session. You know, we opened up and then pretty much had a grind down all day. We opened above Friday's high, and once we went below it and stayed below it, I think some guys, made some cute money short in the spiders or in a few different sectors. But then all of a sudden, you overstay your welcome, like that. The imbalances came out and the market took off, and what took 4 hours to transpire was taken back in 20 minutes. So that's why you use a tier system, and that's why you have pivots. The two pivots that were important today for me were 210.25. Below that, you know what? Think about hands off, because maybe we can go lower. And then you had Friday's low of 209, I think 47. Below that, maybe an outside day. Well, what wound up happening is, we went below both and then reclaimed that 209.46, so hopefully you use that to cover or maybe even get long. Because now if you look at the chart here, you'll see that this potential spot, instead of going into an outside day, could be turning into a bit of a flag ahead of prior resistance. So what does that mean? It just means that a little consolidation. Here was your breaking of the descending channel, inside day here. It could have closed on the lows. It could have closed below this 2,099, but no, it closed pretty well. So at this point, still constructive. Remember that red dog reversal right here, where it could have closed on the lows, but it didn't. Closed back above 2,034, gave you a quick move to the trend line, and boom, above. So the question is, can we do a little bit of work sideways here for it to break out? Some think that that buy and balance will be just negated in the morning. At this point, I really don't know. Some things are acting well. If you're committed to it, if you have a reason to be in it, be in it. You look here, this is 2-year resistance going sideways. So at this point, we know 2130, and then we know, 2111. And at this point, I think some sideways action within this to let the moving averages catch up, would be better. Okay, and then if you want to just take a quick look at what happened in that last 5 minutes, pow. People like, what could you have seen, I guess, to help? First of all, if you want to look at on a tactical level real quick, this was your upper flag. You had all these little topping tails, and then once it broke here, this was your signal to maybe lighten up, and then once it got below, okay, the 5-minute bar and stayed below, that was your second signal to maybe get out, get short, and then literally you had a pull down, a flag, and continuation, and then finally, you guess you could say this was a double bottom. Here was your, W after that. If this was like a daily chart, ignited, held the top end of it. So if I was short, I would say this was, this was the spot that got reclaimed that you probably should have just covered, which was, again, probably the 2094, which was Friday's low. And then you wouldn't have had to sit through the pain of, whatever amount of pain this was if, you started shorting, saying, oh, I'm going to short here. But remember, what does Red Dog say? You never short an igniting bar. Because an igniting bar, what could it do? It could ignite a new move, especially if there's commitment to it, and that's what you saw. So we'll see what happens tomorrow. Two signs that maybe that imbalance craziness was going to happen to the upside. The bios were strong all day, so was the Qs. If you go to the Qs, definitely still hanging in there. Here's the highs of 2016, still in this ascending channel type of formation where it looked a little wishy-washy but came back up, and it could stay in this as long as it wants to. The Russell was strong all day also. It too, this is actually at highs of 2016, so there's nothing so bearish here either, except for it's a little extended from the 8-day and it's a hard setup. And then you have the bios, which have been broken. They held up all day and they closed in the green. Last time we spoke about a good pattern to buy was right here. That was like 265. Then you held sideways here, and now boom. It looks like it's making its way back towards 290. So, got to just pick and choose your spots carefully. And if you don't like the spot, then don't do anything. As far as individual names, Amazon took off fast and Facebook failed. So which one did you pick? I picked Facebook, and Facebook wasn't fun. If you picked Amazon, much better. The funny thing is actually, whatever. On Friday, it was weak, right? It was down on a sort of strong day, so maybe you trapped some shorts, and then boom, it took this out of my note. We talked about being a buyer at 717. I think some of you did. You'd be up about 6-7 points, and we closed on the highs of the year, so maybe you get follow through tomorrow. Facebook, didn't get through, didn't fall apart, but Facebook's being Facebook. It's very slow. Came into here, held, and I guess the longer it holds this spot now, which you could trade against, which is 118.12, maybe the higher the probability that at some point, it takes this out. So at this point, it's still very, very choppy, and they want to catch some shorts and they want to get you when you're sleeping. I think it's still, this is not the high of the year for 2016, just a matter of when it's going to go. It kind of picks and chooses its days, so we'll see what happens tomorrow. Amazon was the one. And then you had Microsoft. We were keying in on Microsoft, could have filled the earnings gap or get in there. And again, these things are tough. Microsoft did wind up getting into this spot, but it did it in the last friggin' 40 minutes. I was buying it at 10 o'clock, 10:30, couldn't go up 10 cents, and then go to your 5-minute chart, and look what happened here on these imbalances. Pow! Damn it. This was me. I was a buyer here, I was adding here, and then I had to get out there because look at the size of that wide range bar. And I was feeling happy that I did it here because I'm, you know what, it's probably it for a while, and then boom, all the way back up. There's really nothing you can do about that. If you happen to have been short Microsoft, maybe right around here, okay, this happened fast. So this 2-bar move is pretty, I would call that an igniting move, and then when it held sideways, this is when you had to, switch your gears quick for, if you were short and if you were looking long and you were still not worn out, then here, boom, that was your afternoon payday. This was definitely descending in nature. Then you go to oil. Oil reversed, from being stronger to weaker. Here was your your daily support, and it broke. It too had to give you one little failure or head fake right here. Looked like it was going to continue, and then boom, and then it broke below. So we'll see what happens there. If you go to the daily chart on oil now, it backed off a little bit. You do have a little bit of this one didn't come off the lows. And closed right on the 8-day. So I would just be a little careful. I don't know if it's just something you should be all in short, but if you've been riding this up, I would have taken a little bit off because you did go above a prior high and closed on the lows, and the 8 days right there, and it still could hit this 21-day and be fine, but if you're an active trader, you might not want to sit in for that. So we'll see what happens there on oil later. And then, you had Apple. Apple was kind of weak all day. The news that they're going from maybe a 2-year cycle to a 3-year cycle. Some guys also, were trying to sit short after it went green quickly on the open. It was weaker all day and then gave you some downside. But if you pressed on weakness, you probably gave back your entire day in Apple. The same way if you've been buying on any kind of strength, that's been tricky too. All in all now, you look at Apple and still looks just fine. Okay, it's pretty much holding above the post-earnings gap, giving you a nice little bull flag. Traded below the prior low here of 99.25. When as low as 98.82, reclaimed it. So if you were short and it reclaims it, you got to get out of the way. And it's, again, hard to see something like this coming. But we'll see, what could you have seen here? Actually, not a heck of a lot. Just tick, tick, tick all the way back up. And here's when it reclaimed the prior low right there. So unless you have a short thesis for Apple, I'd be a little careful. Here you couldn't really see much. There was no clear-cut pattern that it was going to stay weak except on the way down. Yeah, so now at this point I wouldn't be short Apple overnight, and I wouldn't be long it. But right now it looks like getting a nice little bull flag that could get some continuation if this market wants to take out 2100. So I'm going to close it up by saying the month of May was a decent one. You had that head and shoulders top that turned into a red dog reversal long. We'll go through the spiders. These were the spots to make money, right? Right here, it did look as if we had this head and shoulders top. You did have a grindy type move from 208 down to as low as 202.70. Here, I think a lot of guys made money on this little reversal from here into here. And then you had the breaking of the descending channel, so I think this 2-day trade also was good for a lot of guys. And now it's a little hard, it's a little tricky. Coming back up against old resistance, we're a little bit extended, the fundamentals aren't great, but here we are ahead of this bigger resistance, and it seems to me like it's going to get taken out. It's just a matter of how it does it. But no one wants to get caught at the wheel, and there's that. So today, the Bears had their chance a little bit at some point, and they lost the ball again. And now we'll see if this if this spot turns into some kind of upper consolidation for a better platform to go back towards highs. And I hope you had a decent Tuesday, and I will see you in the morning. Have a good night.